two things going on here. One is the dollar increase against the euro. That's a big factor. Mandela's worried it will impart a deflationary influence on the economy. The second thing is the gold price, and you're a gold bull, which is really a pox on all your paper currencies and probably all your fiscal policies as well. Now, Don, how do you read this? Is the dollar shooting up too fast? Is that a problem?
I don't really understand where Mandela's at. I respect the guy tremendously, but I just think he's completely wrong about this. He's just falling for pretty typical sort of devaluationist strategies. I'm afraid I strongly disagree with him and your last speaker. I don't understand how you can have a world where a falling dollar increases demand for our goods, but then a rising dollar shows that there's demand for our goods. I mean, I just don't get it. The reality is what you just said, Larry, that gold goes up on days when the dollar goes up. Gold goes up on the days when the dollar goes down. So this isn't about the dollar. The dollar looks strong on some days because the euro looks weak, and then the dollar gets weak for the last week when the euro looks strong. But gold just keeps making new all-time highs because there's one thing we know. We know that the authorities in Europe and in the United States are not going to let the world fall into a double-dip recession. They are going to borrow their way out of it. They are going to print their way out of it. And gold is not passing judgment on fiat currencies as a concept. It's just saying that the world right now is on an irrevocable course to printing too much of it, whether it's dollars or euros.
Dirk Van overvalued right now. Gold has quadrupled in the last 10 years. Is gold, has it gone too far, Don? Are these deflationary forces going to subvert gold and the fact that everyone in the world likes gold right now as an investment?
Look, gold, first of all, not everyone in the world likes gold. It's not a crowded trade. And if it is a crowded trade, it's crowded with guys I love to be in a crowd with, like George Soros. So let's take that off the table. Number two, don't worry about gold quadrupling over a decade. In 1979 to January of 1980, gold quadrupled in 13 months. That's a bubble. We are not in a gold bubble. And gold right now making... And hang on. And gold right now at all-time highs, it's not a selling opportunity because of deflation in the future. It's a buying opportunity because Ben Bernanke is absolutely dedicated, single-mindedly, to fighting deflation. And the more deflationary factors that you can name, the more reason why he's going to get looser and looser and looser.
Line in the Washington Post this morning, front page. Jobs bill blocked in Senate. This is a $200 billion bill. Well, it's about $150 billion, and it's got a $50 billion tax hike on multinational corporations, on private investment funds, and oil and gas companies. But it can't get through. Is it possible they're wising up? Because Greenspan correctly wrote today, lower spending would stimulate the economy, whereas Paul Krugman still believes in the 1930s model that I guess Dirk believes in. So, Don, I need you for direction here. What's going to help the economy?
I suggest we not listen to Greenspan or Krugman, because I think they're both wrong.
But they got it right, Greenspan, once in a row.
I don't think so, Larry. I think the key is this. The only way America is going to get out of the hole is growth. So the question is, what causes growth? Austerity doesn't cause growth. Government spending doesn't cause growth. What causes growth? Private initiative, private risk-taking, private innovation. So if the Democrats are willing to let deficits run for a little while it's so cheap to finance them, which is Krugman's point, let's do it through tax cuts. Let's just cut every tax rate to zero for 2 years.
Wow.
And just see what happens.
What a lovely idea.
Wow.
David, good.